Welcome back, viewers, to another weekly episode with our lovely Dr. Andrew Wilson on the podcast. Doc, so much has been happening in the market these days. Over to you.
Always nice to talk about, and thank you for the calling me lovely, but haven't had that one for a while. But I'll take it as it comes. But yes, another big week in property that we'll discuss today. We've got the latest rent report for houses and units for June, so it's the latest data there. Some interesting results, maybe some trends emerging. We're also going to look at the latest home lending data, which is a little bit softer over May from the ABS, but we'll look at the larger trends there. And today we're going to look at what's happening in the individual states in terms of buyer type lending, which I think is very interesting because it does give a pointer, I guess, to where the demand lies for lending. And of course, lending is a key part of what's happening in the housing market and does translate typically into what's happening with prices. And as usual, we'll finish off looking at the weekend auction results, which we love looking at because they're like reading that crystal ball, because they do tell us what's happening broadly in our housing markets, and they don't let us down. But we've got, again, some very interesting results from our auction market, which is the first results for July. And the winter chill is here, but it's not that chilly in our auction markets, which is a little unusual because this is usually the hiatus of our annual auction market environment, notwithstanding, of course, January, where everybody's just forget it. But we're getting some quite solid to strong results for this time of the year. So once again, looking at the underlying strength of the housing market, Australia's housing markets just keep on giving, keep on keeping on. So let's get started and look at some slides.
Thanks, Doc.
My housing market, of course, is thank you. And my housing market, of course, is our operational brand. We act as commentators and data providers for the housing market. Now, our mantra is current state and future prospects of your housing market. That's what we try to provide. I think we do that pretty well. And especially the current state. And that's what our podcast is all about. It's trying to tell us what's happening, tell everybody what's happening here and now, current state. And we use a number of different measures, but we use the measures that are coming through every week. So we refresh our insights into the market, which is good news for those that are watching it, because you want to know what's happening here and now and not rely on a lot of the scuttlebutt that floats around in terms of what's happening in the housing market. So let's get started. We're under the gun. This is the week in property to Wednesday, July the 10th. We're past the middle of the year now. So we're heading for summer. We're heading for Christmas. Oh, my God. Can you believe? But so the week ending Wednesday, July the 10th, all the latest data. So that's first week. We're going to look at, as I mentioned, the June house and unit rent report, the latest home loans, and the weekend auction reports. So the general scenario for our, which has been a bit up and down over recent months, the vacancy rates actually increased, which is good news on the surface for tenants, because that means there are more vacancies per se. But the vacancy rates are still very, very low. There's still certainly a shortage of property, be it units or houses. And there's really no relief in terms of rents coming through. So we need to see a couple more months of data to start talking about some relief or some end to the rental market crisis as it's probably been described over the last year or so. So low vacancy rates rise. And that was in for both houses and units generally. I think there's some seasonal effects there that have affected the market because we are into that holiday season, end of semester, particularly for the higher education sector, means there's less demand for property. So vacancy rates pushed up perhaps as a response to that. But rents are certainly continuing their upward trajectory. So no significant relief as yet for tenants, but just a glimmer of hope there perhaps going forward. But it's still very much a landlord's market, still very much a position of way too much demand and not enough supply for rental properties generally across the board in our capital cities. So this is the result for houses. We can see there that most rentals were higher or flat for houses over the month. The big mover was Perth, which is a red hot market at the moment. House rents up 2.2% over the month. New median house rent there in Perth of $685 asking rents. Adelaide was up 1.2%, another strong housing market generally, that Adelaide market. Darwin was the big performer, up 5%, but that's a volatile market, that Darwin market. It does have a very seasonal profile in terms of its property, wet and dry, and of course we're moving into the dry now. And it's also fewer properties there, so you do tend to get a bit of you can get a volatile result. But Darwin nonetheless up 5%. Sydney up 0.2%, but it's a new record high. Median house rent, can you believe that? $820 a week is now the median for if you want to rent a house in Sydney, asking rent. Melbourne up 0.8%. We continue to talk about a revival in the Melbourne rental market. I still think that's on the cards, and we're certainly seen some increases over the past year in Melbourne. Brisbane flat, but Brisbane's been roaring along, so a little bit of a pause in Brisbane. Similarly, Canberra and Hobart. If we look over the past year, the big mover again, Perth, rents up 14.2% for houses in Perth over the past year. Brisbane, very strong market, similar to Perth. House rents in Brisbane up by 10.3%, Sydney up 9.3%. Melbourne house rents up 8.5%. Darwin, as I said, a volatile market, up 11.2%. So rents have increased in every capital city over the past year. Underperformers Hobart, and Hobart's housing market has been a little soft over the past year. And also Canberra, which we're starting to see some general revival in the Canberra market, which we'll look at with our auction results. But still, over the past year, house rents have been reasonably flat. Now, we mentioned that vacancy rates were higher, which that graphic should show us for the change over the month. So vacancy rates were higher over the month. But look at those vacancy rates. They're still crazy, crazy low. These are, unprecedented, consistently unprecedented vacancy rates below 1%. And even though we saw an increase over the month, we've really only got Canberra, Hobart and Sydney at 1% basically. So we've got to understand that vacancy rates of 2% usually represent a sort of a balancing of the market where you've got a balance between demand and supply and flat rents. So anything under 2% is typically in favour of landlords, but when we're 1% and below, it's very much in favour of landlords because that means higher rents and a shortage of property. So look, yeah, good that vacancy rates have gone upwards. I think there's some seasonal impacts there reflecting that, but nonetheless, these vacancy rates are still a horror story for tenants out there looking for houses in the market. So I think that's the big picture here. Vacancy rates, yes, eased a little bit, which is good news, many more properties available, but still very, very, very much in favour of landlords with lots of demand and not enough supply, and rents are still rising and at extremely high levels. So that's what's happened with houses over the month. And let's look at units now.
That's great news for investors there, Doc.
Well, it is, and that's the point. We're looking at a market between investors and their customers who are tenants. And if you're an investor, you're certainly holding the whip hand at the moment because there's plenty of demand, and that's what those low vacancy rates and higher rents reflect. This is also with high demand. It's not just about upward pressure on rents. It means that you've got a wider choice of tenants, prospective tenants for properties if you're a landlord. And that means, I guess, you look for what might be termed more of a quality tenant. And this makes it tough for tenants when you've got 20 or 30 applications for every rental property in most capitals. Certainly, I don't think that's outrageous per suburb. And, that makes it very, very tough because only one of them can be successful, So good news at this point for landlords. And we know that because, as we'll see with the lending data coming up for landlords have really, investors have really been moving back into our housing market. So units, a little bit more of a mixed bag for units. Melbourne, as I said, reviving. We had a weaker market in Melbourne over May. This is a sort of a recovery, a bounce back, 8.2% increase in unit rents in Melbourne. But it's more of a recovery from what was a down month the previous month, which was May. So back in town, I think, as we said before, that Melbourne rental market. Brisbane down a little bit, 0.8%. Adelaide up marginally, 0.5%. Now, you've got to understand that Adelaide, Perth, Hobart, and Adelaide and Perth particularly are small unit markets. So there's not a lot of demand, or not a lot of supply or demand for units in Adelaide and Perth, although there is some demand, there's certainly not as much supply. So you do tend to get more of a volatile result. But there's no question about the strength in terms of volumes in Sydney, Melbourne and Brisbane. They're big unit markets. Brisbane, as I said, just eased a little bit, 0.8%. Adelaide up 0.5%. Perth down slightly, 0.6%. Hobart up 2.8%. Again, a very small market, and get volatile results there. Darwin up 3.1% and Canberra down 3.5%. When we look at the annual figures, they give us a better feel for what's happened with unit rents. Sydney up 3.8%, Melbourne up 7.2%, Brisbane up 7.7%. Again, Adelaide and Perth leading the charge. Big rises in unit rents there. I think the big number there is really Brisbane, because that's a significant unit market. And we've seen rents in Brisbane up by nearly 8% over the past year. So still some strength there. Maybe some signs of a little bit less or a better balance between tenants and landlords in unit markets generally, but I wouldn't be getting too excited about this early days. And those increases are still quite strong, those annual increases. Now, similar to houses, we did see vacancy rates rise across the board over June compared to May, previous month. And those vacancy rates are certainly not as low as houses, but amongst the results there, certainly we're seeing some still low results. So vacancy rates certainly, although they are still low, are not as low as house vacancy rates. But we are seeing a number of capital cities now with vacancy rates above 1%. Melbourne, even though rents have been rising, vacancy rate of 1.8%, Sydney 1.5%. So certainly some signs there, early signs that we're getting some relief there in the unit market. But it is early days, and as I said, I think we've got some perhaps reasons behind that that easing, the seasonal reasons. So we'll keep our eye on this, but maybe a little bit of hope there for tenants in the unit market going forward, but still a significant imbalance between demand and supply going forward. So that's our rental story for the month. And as I said, I think we've got some seasonal impacts there with that easing in June demand. And even though we've still got low vacancy rates, certainly upward pressure remains, particularly in houses, but also generally for units as well on rents. And that's the bottom line here. So going forward, we need to watch the next couple of months of results to see if we can consolidate that, what are early signs of a rebalancing of our rental market in units, certainly not so much in houses going forward. So if you want to have a look at that latest My Housing Market June house and unit rent report, there is a QR code. You can take a photo of that, take a picture of that on your smartphone, and it'll give you a link to a PDF file so you can get all that data to analyze in terms of what your specific interests are in terms of location. So that's the rental data. Let's have a look now at some very interesting data, which is the home lending data. So this is the latest ABS home lending data for May. Just want to mention firstly that we've been saying in regard to the ABS, particularly the home loan data, and they've admitted that there's just, we meant to take this with a little grain of salt going forward, because they have had some problems, not just with their seasonal adjustment through COVID, which seasonal adjustment models all went out of whack because, during COVID, typically weak months were stronger and typically stronger months were weaker. So we have to wait for all that to wash through the system over a couple of years. But and also the data originating data for the ABS home loan set also had some question marks over it, which they admitted they had to revise. But nonetheless, I think we can still see in terms of the relative position, particularly the buyer types, understanding what's happening in the market. So that's the data, down by 1.9% after a couple of months of increases. Just an easing there over the month, but home lending certainly well ahead of where it was before. This is total home lending seasonally adjusted on a month-to-month basis. Down a little bit, but certainly well ahead of where it was a year ago. And I think that's the important factor when we're looking at that sort of seasonal adjustment process. When we break it down, you can see, and this is the goal at the top there, are owner occupiers in total. Then we have the black line, which are investors, and the grey bars there are first home buyers. And as you can see, all of them were down, even though they have all been rising strongly this year. So we'll have a look at those comparisons. We can see there all the buyer types down over the month. Owner occupiers down by 2.3%. First home buyers down by 2.9%. Investors down 1.3%. So there was some consistency there. Okay, but it's been a strong period really over the last year. So I can see the year-to-date investors. Hey, look at this. Investors up 28.8% so far this year compared to the same period last year. Owner occupiers up 11.6%. And first home buyers up 16.5%. So as we saw with the chart just prior to this slide, it's been a very strong start to the year, or first 5 months of the year, for all buyer types for lending. And this, of course, reflects what's happening in our housing markets generally. But this is good because we understand where that energy is coming from. If we look at the full year to May this year versus the full year to May the previous year, we can see there again investors are leading the charge. So it's really been an investor-led market in a sense over the past year. And I think that's, as we mentioned at the beginning, reflects higher prices, higher rents, and certainly a return to confidence in that section of the market, because that's really surging at the moment. And I think that's always a good forward indicator because it's telling us what the market's thinking at the moment. And certainly there's plenty of confidence from investors and first home buyers also in the market, and they're motivated by, of course, wanting to get away from those higher rents and trying to get into the market while they can still afford it as prices are rising. But I think the big signs there were for investors, very strong results there, even though the market was a little easier over May compared to June. But as I said, perhaps we need to take that with a bit of a grain of salt. But the longer term models are certainly clear in terms of rising activity, particularly for investors. So let's have a look at the where it's all happening here. I think this is quite interesting because when we break this down on a state-by-state basis, we can see where the strength is. Now, excuse me. Obviously, when we're looking at New South Wales, the reason why typically New South Wales leads in terms of investor activity, and as you can see there, it's clearly the top performer over the month, is because that Sydney housing market, particularly, is much more expensive, has higher prices than the other markets. So the value of home lending has to be higher because prices are higher. But still, it's a big difference between home lending for in New South Wales versus Victoria. But the big change, or the big dramatic difference there, is for investors. And you can see New South Wales investor activity clearly led the charge over the other states. But the other, I guess, interesting point from this chart is that first home buyers are strongest in Victoria. Again, probably representing some better value at the lower end of the market. But Victorian first home buyers, and there are a number of local schemes there that are very attractive for first home buyers in Victoria, and that's translating into the highest value of home lending for Victoria. So I thought that was quite interesting. Also, we can see some strongish investor activity in Western Australia as well. So I think that reflects, again, that strong Perth housing market. But the key takeaways there are, New South Wales, aka Sydney, strong investor market. Yeah, a little bit of higher prices generating that value. And Victoria, aka Melbourne, is the strongest market in terms of first home buyers. And I guess lower rents, as we've seen, compared to the Sydney market in Melbourne, is also helping those first home buyers save to get into their first home. When we look at the growth over the past year in terms of this is the first the first 5 months of this year versus the first 5 months of last year, you can see where the growth, and look at the change in investor activity in Western Australia. And that just reflects that, surging Perth market, where investor activity is up nearly 70% in Western Australia over the first 5 months of this year versus the same period last year. Also, Queensland, very strong investor activity up over 40%. You know, a lot of people want to take advantage of that southeast Queensland boom. In fact, strong markets all the way up the eastern seaboard in Queensland, and you can see that's certainly attracting investor activity. And New South Wales coming in there, but lower than South Australia and West Australia. We know how strong the Brisbane, Adelaide and Perth markets are, and you can see there that's clearly been driven to a significant degree by investor lending in those markets. So pointing the way again, reasonably similar the other results there, although again Victoria has had the strongest growth in first home buyers. First home buyer activity in Victoria up over 20% over the first 5 months of this year compared to the same period last year. First home buyer activity, you know, not too shabby. The increase in Western Australia as well, and of course they're motivated by those higher prices as well to get into the market. First home buyers up by nearly 20%. So some interesting results there. Investors on the surge, and certainly in those big three markets of Brisbane, Adelaide and Perth, you can see that's generating a lot of investor activity, investor lending activity in those particular markets. So I think some really interesting stuff there from the ABS data, and we'll continue to bring those state-by-state breakdowns when we get the data released every month, which I think that gives us a nice pointer to what's happening at the local level rather than just the general national level. We also bring in, I'm not just sure we'll continue to run this, but this is our established home loans versus home loans for new housing. It's a bit of a supply side story. You can see how new housing loans have fallen away compared to established housing loans. That's just another reflection of how tough it is to get new supply coming into the market. We know that's the problem with our housing market, too much demand, not enough supply, and there's another chart to sort of validate that. And when we look at the proportion of loans for new housing versus established housing, you see how that's fallen right away since that surge we had from the previous government's home builder policy at the end of COVID. But still, those low levels are much lower than pre-COVID levels, or certainly lower than pre-COVID levels, and maybe just a sign of consolidating there. But, you know, this is just another story of undersupply, which will mean higher rents and higher prices going forward. So let's have a look, finishing off with the latest weekend auction results. You know, Happy New Year to everybody. It is the new financial year. We're up and running. Although we said that last week. We said that last week, but we've got our first results of the financial year in the auction market, weekend auction market. And again, you know, good solid results. Yes, listings a little bit lower on a week-by-week basis, but when we look back a year, we're just continuing to see these massive changes, increases in the number of properties going under the hammer and the number of properties being sold. These are record results for this time of the year. So sellers are plenty confident out there. And why wouldn't they be when we've seen all the data? Even today, home lending, rents rising, vacancy rates a little higher, but still low. You know, it's certainly providing a lot of confidence for those who are engaged in the housing market. We're seeing that from seller activity, you know, because sellers have certainly got the most skin in the game, and they're now back and have charged back into the market this year. So once again, similar results. Even though we've sort of got holidays in some states and holidays in some states finishing, some beginning. So it's a little bit of an up and down there in terms of activity, but the numbers have been very, very strong, continuing. And clearance rates still, you know, quite heady for this time of the year. So let's have a look at Sydney. 730 auctions in Sydney, up a little bit from the previous weekend. But look at the comparisons to a year ago in Sydney. 467 auctions over the same weekend last year, 730 this weekend. And the clearance rate wasn't that much lower than where it was a year ago. These are extraordinary results for that Sydney market. Clearance rate, you know, pushing into the boom time sort of market, 80%, but I'm not saying we'll get there, but gee whiz, it's a very good result there for sellers, with nearly 8 out of 10 properties selling under the hammer last weekend, and the number of auctions is just crazy, really, for this time of the year. Melbourne, a little bit lower with school holiday impact, 600 auctions in Melbourne versus 799 the week before. Similar sort of clearance rate with Melbourne, which has been, yeah, just sort of muddling along a little bit, that Melbourne market. Still a seller's market, but certainly not the sort of competition for property that we see in the other markets. But again, look at 600 auctions last weekend in Melbourne compared to 447 the same time last year. And really, yes, clearance rates are lower, but given the number of properties versus the clearance rate, we're still seeing high numbers of actual sales compared to a year ago. So Brisbane, similar story, higher listings in Brisbane, 95 versus 80 the year before, but only 52 the same weekend last year. Again, a massive increase, a big result. Anything over 50% for Brisbane, because it has a different auction culture, as we mentioned every weekend, is a strong result. 62.6% clearance rate in Brisbane, not far away from a year ago. And of course, a year ago, Brisbane was in the middle of that massive migration generated housing market boom. So more strong results there in Brisbane. Adelaide, 102 auctions up versus the previous week, well ahead of a year ago. Same old story in Adelaide. The clearance rate's down a little bit in Adelaide, but still the strongest market in the country with a near 80% clearance rate. We're just used to 80% clearance rates. We got used to that week on week, month on month in Adelaide. Come down a little bit, but gee whiz, a very strong market nonetheless for sellers. And hey, look at Canberra. Here comes Canberra, maybe. But we're seeing consistently higher clearance rates now in that Canberra market. So some very positive results there, which we sort of predicted that Canberra would be on the rebound. It certainly looks like that now. Auction numbers were lower, school holiday impact, but again, similar to the same time last year in Canberra. Again, it's some signs, positive signs there for that Canberra market going forward. So let's have a look at the trends. Sydney so far over July, and of course we're only talking one weekend, is as high as it's been in nearly a year. So some very strong results there continuing in Sydney. We'll have to see if that holds its own over the next few weekends of midwinter. Melbourne down from where it was a year ago. Down a little bit to start the month. We need to keep our eye on what's happening in Melbourne, but it has been in that mid-60s range now for quite a while. But we are clearly seeing a revival in the Melbourne rental market, and that's usually the first sign of a bounce back in the market. So we'll wait and see if that holds true for Melbourne. Brisbane keeps on keeping on. Very strong results these for Brisbane. As I mentioned, has a different auction culture in Brisbane. Once you get over 55% in Brisbane, it's very much a seller's market, and certainly over 60% means that we would expect to see continued consolidation or higher prices coming in out of that market. Adelaide still tracking at around 80%, strongest market in the country, that Adelaide housing market. We know prices have been really heading north over in Adelaide over the past year. And Canberra, as I said, maybe back in town. There's a bit of a trend. Looks like it's emerging there in Canberra. So expect to see some higher prices coming out of Canberra, and it may re-engage with the Sydney market, which it sort of lost track with, which it usually sticks with at the end of last year. But some good signs there coming out of the Canberra market. If you want to get those latest auction clearance rates, you get onto my LinkedIn site at Doc Andrew Wilson at LinkedIn. Every Saturday around about 6:30, we have the headline snapshot, which is all the capital city clearance rates and listings, and then and the comparisons to the previous week and the previous year. And then on Sundays, you get the full national report, which gives the regional breakdowns for Melbourne and Sydney and the top 10 sales under the hammer for each of the capital city markets. So as I mentioned, these record listings that we're seeing, and still quite reasonable clearance rates generally, certainly, in favour of landlords. That's not landlords in favour of sellers, you'd have to say, are producing some big numbers in sales. Now, these are record sales over the year so far, and we can see 34% increase in sales over the first 5 months of this year, the first 6 months and 1 week, one weekend compared to the same period the year before. 34% higher in Sydney, 25% higher in Melbourne. That trend is still rising in Sydney, down a little bit in Melbourne, still high, but the trend is just easing. Brisbane trend still rising, 17.9% more auction sales, 13.6% higher in Adelaide, and now 2.5% higher in Canberra. And we're still, as I said, particularly Sydney, Brisbane and Adelaide, we're still seeing strong increase in that record trend of prices sold under the hammer compared to the same period last year. So, what more do you need? Very positive market at the moment, and keep an eye on those weekend auction clearance rates as they come through. there's our latest national weekend auction market report. If you're interested in looking at that, take a picture with your smartphone, and that'll take you to a link to a PDF file for our latest weekend auction market result. As I said, it gives you the regional breakdowns for Melbourne and Sydney, as well as the top 10 sales for all the capital cities. Now, as we always do, we're going to finish off with a bit of a plug for the My Housing Market Infinity Market Suburb data app. If you want to know what's happening on every suburb in Australia that has data, get a hold of this app. You've got to get a password from Infinity, become one of the Infinity group, the member, and you'll get a access to the password, which will get you an access to the app. There's a screenshot of a QR code on a screenshot that you can take a picture of to get a link to the file, and there's the link above there to the file. But you've got to get the password from Infinity to get access to this great little app that we run and we update every day. And here's just a screenshot of the app. You can choose to rent or buy. You can look for filter it for regions, capital city regions and non-capital city regions in each state. And then you filter for the suburb of your choice, and then the type of property. You can filter for a house, a unit, or a townhouse. And then you can also filter for the number of beds. So how comprehensive is that? And then it gives you, we've used Blacktown as an example there, big suburb in Sydney. And you can see there it gives.
Such a great tool, Doc. Sorry to interrupt.
It is. Wait, no, interrupt away. And you can put that on your smartphone, and at any time you have access to this data: high price, low price, median price, and the number of listings. And you get the same sort of data for the rental market as well. So it's not just prices; these are asking prices. So it's telling you what every seller and every landlord is thinking right at the moment in terms of these individual suburbs. And you can see just how what sort of competition there is in terms of the number of listings for sale or for rent in each of those capital cities. And it covers the whole of Australia. So you get data there for any suburb that actually has data going forward. We're going to add some bits and pieces to that going forward. You'll be able to get, for investors, some really good information on yields, which is another important factor for the state of the housing market, and also a good pointer for investors looking to get into the market. So next week, we're going to look at our house building costs, which has been improving a bit, latest house building cost. Let's look at regional house prices next week. So we'll see how the regions are going. That's the major LGAs of every state, how they're performing. Also, now that we've had the rents and the prices for June, let's have a look at the latest home investment returns. So we'll look at yields and total returns for our capital city markets based on that June data. And as usual, the latest weekend auction results. Will we still see that heat in the midwinter market, that we've seen, which has been really remarkable, unprecedented. But school holidays still around the place, but doesn't seem to be affecting the buyers out there and the sellers, who are all action stations, in terms of moving in the market. If you want to get a copy of the full report today, there is the QR code for today's report. That'll get you a link to the file. So that's all from us today. Again, big week in property, as it always is on our podcast. So I get all set for next week's results, particularly those regional prices. That's going to be very interesting to see how regional prices are going, and our building costs also, continuing to fall, which would be good news for inflation. And for those that are looking to build a property, and for those that want to see more supply in the marketplace. So I'm going to chop off now. I've had a few coughs and splutters today. I'm at the back end of one of these colds that just about everybody's got. But it is winter, I suppose. But
it's going around, Doc.
Yeah, I know it's everywhere. But at least I've got through it sort of okay. I only have to push the mute button a couple of times, and not too much yet. Not too much editing, I don't think, but I look forward to seeing everybody next week, and with more great information.
Always a pleasure, Doc.
What's happening in the market? Thanks, mate.
Always a pleasure, and such a comprehensive wrap up of what the housing market's doing, mate. So looking forward to next week's episode.
Great stuff. Thanks again for today.
Take care. Stay safe, mate.
You too.